Smooth 98.1. It is gone past 6:34 Thursday morning. This is Business Express on Smooth Breakfast. So, of course, Victa Pepple.
Yes.
And myself, Sope Martins. Joining us for the next 15 minutes, we have got our guest in, and this is a Blessing Oladipo, who's an economist for Nigeria with Standard Bank Group. Blessing, good morning.
Good morning, Sope. Good morning, Victor. Thanks for having me.
Thank you for joining us.
Thank you for joining us, and welcome to the show. It's great to have you on. All right, so we're going to get into the conversation in just a bit. We'll be talking about Nigeria's savings and T-bill rates, the rise after the MPR hike. But before that, let's just tell you how to join this conversation.
That's right.
You can send WhatsApp messages in 20809 440 981.
We're on Twitter at Smooth981FM, and we're streaming live on YouTube. It's youtube.com/Smooth981FM. Lagos in there.
Yep. All right, so Blessing, let's get things started, right? So our first thing, let's just talk about what happened with yesterday's Treasury bill auction. So we saw rates rise across all tenures, but the 364-day paper caught the eye by rising from 8.5% in the previous auction to 12% yesterday. So is that all because of the new monetary policy rates, or is there something else at play?
Okay, yeah, thank you. Thanks once again for having me. So now ideally, we should see the policy rate in any economy serve as the major anchor for all other interest rates in the economy. So it's not surprising. It was expected that why we saw the 150 basis point hike. I should point out that market was expecting about 50 basis point hike. That was the consensus estimate, right? And the MPC gave a surprise 150 basis point hike. We should see market react to this. Although, like I said earlier, because the monetary policy rate should anchor every other interest rate in the economy, it was only normal that we should see investors clamor for higher yields at the last auction. And the way God will have it, it was right after the Monetary Policy Committee meeting that we had the auction for the NT bill the next day. So that's why we saw that knee-jerk reaction. And this is not surprising. We saw the same reaction in May after the first MPC policy rate hike. Then it was also 150 basis points. We saw the 1 year go by over 100 basis points. So this only normal, and that's same thing we expect to see across. So normally we would see loans, the cost for borrowing should increase, right? Savings yield should increase. So it only spreads across. Once the policy rate is adjusted, this should spread out because it's expected that policy rate should anchor the economic situation. So if the policy rate is reduced, we should expect that it will drive growth, increase borrowings because cost of borrowing should reduce. So if policy rate should increase, we expect that, it's a tightening stance, right, to reduce this rate at which borrowings are being done. So that's why we saw that investors clamor for higher yields. And if they continue to increase the rate, we should expect to see more clamor for higher yields.
Now, the central bank did offer to raise a total of 108.71 billion naira for the 364-day paper, and in fact did record a total subscription of 233.32 billion naira thereabout, representing an oversubscription of 114.6%, if I'm right. Does that suggest investors were excited?
Well, this is not the first time this month that we are seeing oversubscription of that amount. So the immediate past NTB auction, I think that happened 14th of September. We saw over 300% subscription, especially on the 1 year. Yeah, but during this period, this third quarter, expected ample, a softer liquidity stance than we saw in the previous quarter. So I mean, that could feed into it. But I think the most interesting thing from the auction results is not even the oversubscription, but it's the range of bids. So we saw some investors go as high as 20% on the 1 year. In the previous auction, just to give you a scope for comparison, in the previous auction, the highest bid was 13%. So now you can imagine what investors are expecting because of the monetary policy rate hike, right? That's, since the committee or the CBN deciding to go higher, we should also go higher in our expectation for our yields and return on investment, right? So that's why we saw that. So I think the range of bid was what got my attention more, that investors actually are clamoring for higher yields, right? Although I mean the stop rate was way higher than what it was in the previous year, and it's very much expected, like I said earlier. So I mean, it fits into the first question, where because of the policy rate hike, it spreads across all yields. People expect higher yields on their investment, especially as savings rate is going higher. Do you understand?
All right, now let's talk about the current year-on-year inflation rate of 20.52%. That did not seem to even deter the investors like one bit when it came to the T-bills. What do you make of this?
Well, I mean, for people, for the fact that we are even coming from a way lower interest rate environment, people will continue going higher. We will go as high as, just taking a clue from the last auction, where we saw someone go as high as 20%. That's very close to where the inflation rate is, right? So you see investors are willing to go as high as getting towards the positive trajectory. Right now, we are still in the negative real interest rate trajectory, where interest rates is, where inflation is way higher than where interest rate is. So that's why investors, once we're seeing the MPR move, investors would desire to have way higher interest rates, and if possible, get it at a positive trajectory, where by the time you get the returns on your investment, inflation has not eroded your purchasing power. So just imagine investing in a security for 1 year, you got 8%. By that time, cost of living is way higher, inflation is already at 20%. What does that mean? That means what you could have bought at cheaper by the time you invested, you are getting it more expensive, and that defeats the purpose of investment, right? So that's why you see investors willing to go as high as the current inflation rate. If they could have it, they'll grab it with their full hands.
Okay, let's talk about savings accounts now. I see that the Central Bank of Nigeria directed banks to pay at least 4.65% as interest on savings accounts, deposit accounts, basically, up from 4.2% earlier. Now, are we also attributing these to the hike in MPR?
Yes, it is. As I said earlier, because of the move in MPR, so during the COVID pandemic, we saw that in order to spur economic growth, we saw the monetary authorities revise the rate on savings account to 10% of the MPR. And very recently, they reviewed it upwards again, back to what it was. So now it's at 30% of MPR. So what we expect to see is that as the MPR moves, the interest on savings account is going to move. So currently 30% of MPR is what takes it to the rate that you mentioned. And so that's why we are seeing it move. And because the MPR is expected to anchor other interest rates in the environment, we would expect that as the MPR moves, it's supposed to reflect on other interest rates in the environment. And because it's also a tightening stance, to put it clearer, once we have a tightening stance in monetary policy, we expect that people should save more so that there is less spending in the economy, because we are trying to fight inflation. And inflation is when we have more demand and less supply, right? Because prices would increase. So in this situation, if the CBN or monetary authorities are hiking rates so that people can save better, that would mean that they are demanding less, and that would mean that prices could come down. So it's in a bid to fight inflation. They are trying to spur more savings or allow people invest and save more as against spending. So once they do that, this would also help to fight inflation.
All right, now, Blessing, this is an interesting one for me because my savings account is actually my daily spending account, right? And I know a number of Nigerians use their savings accounts for transactions via debit cards. Do you think is there anyone like a unicorn maybe that still saves with rates under 5%? Anyone?
Well, I think an average Nigerian has more than one saving account or one account, right? You see people have accounts in different banks, perhaps if something happens here, you want to make sure you can get your money from here. So, and you could also, if you talk to people on the street, you realize that some people have allocated accounts for savings where they just want to dump money and they don't want to touch it. You hear people say that I don't even have a debit card on this account because I don't want to touch it.
So wait, hold on. It's like they don't care about the rates, because I know that I looked at the rates my bank was offering me on my savings account and I was like, wait a minute, I'll be losing money with this interest rates.
Well, yes, but right now that we are in a tightening spree in the global space. I mean, you look at what's happening in the US, the Fed is hiking, happening in various developed economies and even in our domestic markets here. So we expect that as if inflation remains at elevated levels, we see that they would continue to hike. And that would mean that the interest rate on your savings account will continue to increase, right? Well, still, it's still at the negative trajectory for now.
Because I was about to say, isn't the whole point of that rate hike the fact that they're trying to deal with inflation, which is running away? So that increase would do what?
Yeah, so like I said earlier, once, because we're trying to deal with inflation, we're trying to encourage more savings. And that's why we are increasing the interest rate on your savings account.
Now, where can some people go to beat inflation, right? If we're moving from some of this.
That's what they're looking for, inflation beating rates.
Well, that would mean you investing in things that are hedged against inflation. For example, in Stanbic IBTC, we have the dollar fund where you save, because look at the trajectory, what we've seen in the Naira in recent times. It's a gradual depreciation, right? And because of that, it's only ideal that you invest in something that is hedged against any further depreciation of the Naira. So we have the dollar fund in Stanbic IBTC under the asset management subsidiaries, where you can actually invest in dollars. That could help to hedge against any further depreciation of the Naira, and also in some sense hedge against inflation.
All right. Well, Blessing, we have come to the end of the show. It's been an interesting one today, especially when we started talking about the savings accounts. But at least you gave us an option for what we can do about getting away from inflation and getting ahead of inflation. Let me put that out there. All right. So our guest today was Blessing Oladipo, who's an economist for Nigeria Standard Bank Group. Blessing, absolute pleasure having you on the show. Come back and tell us more.
Thanks for having me. Thanks.
All right,